Hey everybody, welcome back to the channel. Tomorrow is Thanksgiving and I am very, very excited today, and I'm very thankful today for some of the news that just came out, which is that Cathie Wood just purchased another 455,000 shares of Palantir, 455,947. Now, in this video, I want to do a couple things. Number one, I want to analyze why she's doing this, and there's a couple of reasons why I think she's doing this, but some are obvious. Obviously, the dip is happening, so she's like loading up on it, but she also just did an interview with CNBC. I always say their names super fast. I'm like CNBC for about a couple of minutes, and there's like 45 seconds of gold of what she's talking about that really makes you calm as a Palantir shareholder, because you're understanding, again, her long-term mentality and the trajectory of how she thinks these stocks are going to play out, mixed with her thoughts about inflation and innovation. And it just makes all the sense in the world to just like keep buying this dip, because this dip really is golden and these prices are absolutely ridiculous and they're pretty juicy. So we're going to talk about that. And then we're going to also talk about a little bit of analysis on what prices she bought this at and how much more money she put into the stock and sort of how this is affecting her entire position. So let's get into it. Two of her ARK 6 ETFs ended up buying the stock, not the Core Innovation Fund. The Core Innovation one bought it a week ago, about $28 to $30 million of the dip in around 2 days. So I think it bought like 1.5 million shares within 1.25 million shares per day. That's when the earnings came out, and the earnings just like tanked, even though they were growing 30% year over year and they were gaining profitability. But like whatever, it tanked. Wall Street just didn't like it. So Cathie bought the dip. Now it started to dip even more after that, right? You got to a point where it went from like 27 to 25 to 22, 23, or 23, 24 was that initial dip. And then it hit the 22, and then it hit down to like 20. Recently, over the past 2 days, November 23rd, so today's the 24th, November 23rd, the ARK X fund bought 51,576 shares of Palantir. That was the first buy. And then 39,251 shares of Palantir. And then the ARK Q fund ended up purchasing 365,120 more shares. If you put that together, that's about 455,947 shares. Now I'm going to do some quick math here. Some quick maths. I'm going to say at an average, she got this at like $20.60. That could be totally off, but I don't think that's that off, because she either got it even lower than that, which is phenomenal, or she got it a little bit higher than that. I think $20.60 is probably like a good average. Talking about $9.3 million more into the stock, which again, for Cathie is probably not that much, but for people like us, it's like, wow, that's crazy. Now, putting another $10 million into the stock is not really that big of a deal. It's more so the question of doing it now at this moment. And this is what I really wanted to analyze. She's not waiting for the stock to go to 17, 18. She's waiting for, the stock to eventually go to the moon. And while she's waiting for the stock to go to the moon, she's just dollar cost averaging and buying more and more and more. It would be peculiar if she was waiting and just not buying at all on this dip until it gets to 17, 18, because that would show that she has a little bit less conviction in terms of the short term for it to go even lower, right? Which is why she waits. But Cathie's not the type of person to do that, right? Teladoc is one of those stocks I'm actually thinking of getting into. I don't know much about the company yet, but I do know that's one of the ARK Innovations Fund's second largest holding, and it's tanking really bad. It's like 103, and I think their average is like 160, and she's buying that like crazy. And you would think, okay, if it dropped that much, maybe it's going to go to like 94, 95, I should wait, but she's not that type of person, right? She just keeps buying more. I do think this signals that if the price were to drop down to like 18, 19, she would really load the boat, right? Because if she's loading the boat to the point where she's getting 300,000 shares, 40,000, 50,000 shares there, and all these different funds, not even the flagship innovation fund, right? These are different funds that aren't even the ones that are the most highly like tracked and speculated on. Then I think if it were to go down to the 17, 18 level, she would just buy even more because of that. And she would buy more in the innovation fund at that point. Not only would that massively reduce the cost average, but that would be the point where it's like, this is a golden opportunity. And this is what I was annoyed about. I remember the exact day I started getting into Palantir. I started buying it at 23, and one day it went down to 17, and I had 5,000 in cash. And I was just like, 17 seems really cheap. I knew nothing about the stock at this time, by the way. I knew a little bit about it, didn't really do like super big due diligence, but I was like, 17 seems really cheap. I should buy a lot of it. And I think about like 40 shares. And then the day I bought it, it jumped up to 21, and then 25, 29. And now I'm not trying to, hindsight 2020 this, but I'm saying like, at some level, you've got to go all in when you've got the cash, and do it responsibly, right? This is not financial advice, but when you see prices that are this low and you understand the value of the company, this is where you start to create forms of generational wealth, because you are the one in your generation that is making the decision to take this risk on something that you have done enough due diligence on and you know enough about from an external variable and intrinsic variables perspectives, where you can make a calculated decision that in the next 5 years, this is going to work. So if it gets down to 17, 18 again, I'm probably going to be loading the boat. I'm going to do another video today. I bought $1,000 of the stock today, so you guys will see that video. But yeah, that's kind of sort of my thoughts on it. Now, she did an interview with Andrew Ross Sorkin on CNBC. Let's react to that. It's about 2 minutes. It's really, really good stuff she said, and I want to analyze how that influences how she's thinking about Palantir.
And they dump our stocks, which are either small parts of benchmarks or not in benchmarks. Great opportunity for us, as we have experienced during these last few days, to pick up on those stocks, because it's simply a risk-off move to get closer to benchmarks. And by the way, we think the benchmarks are where the big risks are longer term, because they are filling up with value traps. Those companies that have done very well historically, but are going to be disintermediated and disrupted by the massive amount of innovation that's taking place.
So real quick, what she's talking about here is that the reason hedge funds and stuff are like loading up on Apple right now. Apple went from like 145 to 160, and Palantir is going from 29 to 20, right? What's going on there? The reason Cathie's not going all in on Apple is she's like, it is a valuable company that historically has shown value, but it is going to be disrupted by innovation. And this was coupled with the fact when she was talking about Tesla, and Apple obviously has its electric car, autonomous car stuff coming out in the next couple of years, or it's like rumored to be coming out, which is why the stock price is going so high right now. Her argument is like, look, this is really difficult. This is very, very difficult to build factories that are vertically integrated with AI, autonomous vehicle, machine learning data, and then the actual the machine capability to make the car and make a good car, and then integrate it with all the software that is necessary to produce something meaningful. It's really, really hard. It's not just a simple thing. It's not that it can't be done, but it's very, very difficult. And she's like, Tesla's done it. And that's why Tesla's a $1 trillion company, and that's why Tesla's doing it. And she's like, okay, if Apple wants to compete with Tesla, not only do you need the data, but you need the vertical integration that allows you to actually produce. I mean, how many times has Elon gotten slammed because they just weren't producing enough, right? Like that is a huge problem in this market, and it's not easy to just disrupt it. So Tesla is one of those companies that is going to disrupt Apple if Apple enters the space, not Apple disrupting Tesla, which is why she even said Apple should have bought Tesla, but she was happy that Apple didn't buy Tesla. It ended up working really good for ARK and for Tesla shareholders, right? So at that point, the way I interpret this for Palantir is she's saying, look, these companies that are dipping right now, that are 20, 22 bucks going to 18, 19, they are dipping in the short term while the Googles, Amazons, Apples, whatever are going up right now. But innovation is what is going to disrupt those companies 5, 10 years from now. And let's hear her logic for why.
Just to give you one number there. Right now, we believe that innovation, truly disruptive innovation, is priced in the global marketplace, public markets, at roughly somewhere between 10 and $15 trillion. In 10 years, we believe that number will be 200 trillion. So it will go from a little more than 10% of global equity market caps to what we believe could be more than half. That's how much disruption is evolving thanks to DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology, all of which are converging so that S-curves will be feeding S-curves. We are on the threshold of the most innovative period in history, bar none. You have to go back to early 1900s, telephone, electricity, and automobile to see anything like it.
All right, so let's talk about that. A couple things there that's really, really important to analyze. Number one, innovation accounts for about 10% of global GDP, $10 trillion of global GDP. They expect in the next decade that's going to be 200 trillion. And now that number may sound crazy, but it's not crazy if you think about it. And this is what I really want people to understand. And this is why I'm a fan of her analysis. I'm not a fan of everything that she does, but I'm a fan of this analysis because it's what's led to returns, and it's what makes sense, and it's the philosophy that companies that are adopting and executing against are actually going to win for, are actually going to be able to win in the next 5, 10 years. $10 trillion of innovation is happening right now as a result of equity in the global markets. Now, that makes sense because you see all these different innovative things that are happening and all the features, AI, machine learning, all this stuff that is making our lives better and our lives more enhanced, efficient, etc. If you believe that technology goes on an S-curve, and which means it's exponential and it's going to keep getting better and better over time, then that number has no choice but to go up. Like, innovation's not going away. We're not going back to combustion engines. We're not going back to riding on horses. We're not going back to like phones with buttons on them and stuff like that. Like, we are moving past even the concept of having a touchscreen as a phone. All of these things are changing. So a couple of examples, right? If we were to get past the phone, because content and the way we access content is not on the screen anymore. It's in a virtual field. I'm not saying virtual reality, but more so like your glasses, and it comes as a hologram. If you guys have ever seen any of the stuff that the metaverse, the Facebook stuff is trying to do, but they're trying to say, don't just like the photo of your friend at a concert, go into the concert with them, right? That idea in and of itself, let's say it's 5 to 10 years away, probably 10 years away. That's going to unlock a lot of innovation in terms of the systems that make that happen, a lot of jobs in terms of people to get that to happen, a lot of technologies that are disruptive in order to make those things real, a lot of new hardware that is necessary to produce and manufacture, a lot of software that has to be integrated with that hardware in order for it to be cohesive enough to make sense. This stuff, as she said, didn't happen since the 1900s when we had the automobile and we had the radio and the television and all the, like, that period of time was one of the most innovative times in history. And if you were in those industries as an investor or someone who had equity and meaningful stakes of companies that were doing that, or like starting those companies, you got filthy rich because you were doing something that the entire world was changing. If you are building a content company right now, you are doing something that has the potential to get you filthy rich because the world is consuming content not on the TV and the radio anymore, but on applications that are democratized across these devices. So if you have a TikTok or Instagram or Facebook, or you're building something like that, and you get enough people to start posting content on there and other people to start consuming content on there, then you have a really, really good chance to innovate. And then you have machine learning and artificial intelligence algorithms that make recommendation engines on those platforms, a la YouTube, TikTok, etc., so advanced that you capture the attention of so many different people that now you've created an economy where you day trade attention at scale, which obviously opens up opportunities not only from advertising, but from shopping and from subscription services and all these different things. That's one example of how innovation is happening right now. She names a lot of examples: healthcare, blockchain, energy. All of these different things are having new technologies integrate within them that is going to lead to the exponential rise of innovation. This means a couple things. Number one, this means that betting on innovative companies that are at the forefront of the technology that is able to facilitate that is what's going to win. Now, you can say, oh, she's only been right because it's a bullish market and like she hasn't been in a bear market, or she hasn't really performed that well in a bear market. Guys, you got to recognize Cathie is like 60 something years old. She's been in bear markets her entire life, right? This is just her prime time of being a superstar at this stage of her life because she's taken 40, 50 years of experience, and now she understands, oh, this philosophy could actually work. I'm going to trailblaze this innovation philosophy, and I'm going to get people to recognize that it makes sense. It's not like the logic of what she's saying is wrong. Whether we enter a bear market or not, which we probably will because like markets go up and down, it's more so a question of what does innovation play, how does innovation play a role within the bear market? And if the market is bear and the market is crashing, but innovation is still skyrocketing because it has to skyrocket, right? Like the technology doesn't stop for anybody. Companies don't stop for anybody. Maybe the growth is a little bit slower, the progress is a little bit slower, but it's not stopping at scale over the next 5-10 years, which again is the long-term trajectory, which will have some bull markets and some bear markets within them from a cyclical perspective. Then overall, the bets you're making now will be correct 5-6 years from now. I mean, that's sort of the logic and the argument that she's going for. How does this implicate Palantir? Well, what's the technology company that's going to be at the center of blockchain disruption, at the center of healthcare disruption, at the center of energy disruption, at the center of innovative technologies that actually enhance people's lives, at the center of protection, privacy, and security? Artificial intelligence and machine learning data synthesization. That comes from a company that is actually able to do it, right? Like that to me is why when I saw this interview, I was like, makes a lot of sense. She's betting on, and again, remember guys, she's invested about, now with the recent dips that she's bought as of today, probably close to, or a little bit over $1 billion of Palantir, right? So she's betting that innovation is going to win over the next 5 to 10 years. Innovation is going to disrupt everything. It's going to disrupt Apple. It's going to disrupt everything, which means if you have technologies that are at the forefront of creating and integrating with innovative technologies and analyzing those innovative technologies. Remember Alex Karp in the interview yesterday, he said we're next generation AI. We're not just AI. He's like, don't disrespect me and call us AI. We are doing AI at the highest of levels. Then those are the companies that are going to win. It's just that simple to me. Like it's not, if you don't get it, you don't get it. And that's okay if you don't get it. But if you do get it and you recognize the opportunity, then you've got to get it. In 2017, when I was in high school, I tried to start a Shopify dropshipping store. If you've ever been into business or entrepreneurship, I think the YouTube algorithm recommended me a Shopify video. I wish they had recommended me a stock video over Shopify store video, because if I just taken the $6,000 I tried making a Shopify dropshipping store and put it into Shopify stock when it was like $100, I would be handsomely rewarded, and I would have learned more about the stock market, and I would have understood it a little bit more, because I had the money to invest. I just didn't get it. And also Robinhood should have been more mainstream. So like that's why I'm always thankful for Robinhood, because like I think they actually did democratize some of investing. My point is, if I had known the global e-commerce revolution that was happening in 2017 from an investor perspective, I would have invested in that stock and I would have made a lot of money. I understood it from a business perspective in terms of, oh, people can like set up their own stores and the software makes it really easy, so I should try doing that. I failed at that because like starting stuff is hard and like it's bound to fail. But I didn't understand it from an investment perspective. And 4 years later, Shopify went from $100 to $1,600. Why? Because if you saw at that time that, oh, everyone in the world wants to sell stuff and everyone in the world can't use Amazon because Amazon's just Amazon. What if they could just do their own thing for $30 a month? Yeah, most people would use that. And that's a question of innovation, right? That's a question of how traditional commerce is going to be fundamentally disrupted by technology that is not only simple to use, but technology that gives you the most advanced levels of data, i.e. Shopify data in terms of your store, on how it can become better. That's the mistake I'm not going to make this time with Palantir and with other innovative tech companies. And that's ultimately why I think that Cathie's buying the dip. And that's why I'm buying the dip. And that's why I think in 5 years we will be handsomely rewarded as Palantir shareholders. So yeah, that's it. I hope you guys enjoyed this video, little Thanksgiving treat. I hope everyone enjoys their Thanksgiving. I hope you are all doing well. Thank you for all the new subscribers that have joined this channel. Really, really appreciate you guys. Let me know what other stocks you would like me to talk about. Let me know what other type of videos you guys would like to see on this channel. Would love to provide that content and value to you guys. And yeah, happy Thanksgiving. This is Amit. You're watching The Daily Business Show. And as always, I'll see you next time.